right, thanks for staying with Daybreak. The hashtag is Daybreak. The SMS line is 22422. You can call it 0719777777. We're still talking about financial discipline. And before that, we went to the break. Alfred called in from Meru and he was concerned that his loan just shot up and he did not read the finer print of the paperwork. And George, you wanted to jump in on this in the issue of SACCOs and loans.
Yes, thank you very much. I wanted to come in and advise our viewers that it is simpler and easier with a SACCO. First, by the time you're going for a loan, you already know you have so much deposits and you can be given so many times, 2 times, 3 times, depending on the type of loan. And the SACCOs also make it in advance that you are going for this type of loan, maybe school fees, emergency, or development. Then, in a SACCO, there's a repayment schedule, and usually it's a constant figure that is going to be effected in your payslip. Very interesting. SACCOs operate on reducing balance rate of interest. So you find, while you go for a loan of 12%, in finance we call it the coupon rate, the effective rate is actually 6.7% per year. So our caller Alfred would not have ended up with the loan going to 2, 3, 4 times the way he did. And I think I also observed most SACCOs, the loan form is 2 pages. 1 page for taking biodata, and the second page for taking details of guarantors. It's much, much simpler, more predictable, and even the interest that you are charged, you again share it at the end of the year in form of dividend and interest on income. I think I need to welcome him and the rest of Kenyans. Let's build our own. Let's build SACCOs.
Thank you, George. All right, let's shift gears a little bit. Waithaka, let me begin with you. How early is it to teach children financial discipline? And do children adapt the financial habits of their parents?
Yes, 100%. Start as early as possible. At the moment at which a child begins to count, start dealing with money at that point. Right. This is a special mention, especially to the middle class of this country, where we have coddled our children a lot. We rarely even send the children to the shop anymore. You'd prefer to go yourself or send M-Pesa. Start that process of just send, here's a 50 shillings, go and bring me some bread. They learn the process of buying. Just during the break, we were talking about the fact that children generally do what you do, not what you say. So when it comes to that financial discipline, we were just having that discussion, have a list when you're going shopping. They will watch you. And you pick only the things that are on your list and say, tick. Include them in that process and say, to my 3-year-old, I ask her, before you leave the house, what would you like when we get to the supermarket? And she'll think, I want a lollipop, I want ice cream, whatever it is. And we say, okay, we can't have all of this. Which one do you want? And she'll say lollipop. Good, put lollipop. When you get to the supermarket, what is she looking for? The lollipop. Mm-hmm. She's not now, she's focused again on what you're doing. And when you go through that process, you're learning, you're showing them the process. Mm-hmm. I wanted you two to comment on the issue of that piggy bank, the Jumbo Junior. That was a really beautiful talk about generation to generation. I thought they could add to that.
So my mom, just bless her, she introduced us to the Jumbo Junior saving. Pretty
piggy bank.
Piggy banks, yes. And even when I went to boarding school, every time I would come back with some pocket money, I would change it into coins because it was so fun putting coins inside the piggy bank. So I did that over time. And of course, I loved the fact that every end of the year, there was something that was given to the children. So we used to go to Splash and count the money with them. And then you would actually fill in the slips yourself. So if it is 1 shillings, there were 100 like that, and do that calculation and have fun. So for me, what happened when I got my first child, that was the one thing that I wanted to do for him, introducing to that.
Right.
And even before we started demystifying the tooth fairy, and if there's any child watching, the tooth fairy is real until you get to a certain age. When they start shedding their teeth, you're giving them some money under their pillow, so they know that this money will go to my kiddie bank. So it's something that, for me, I'm very deliberate on, and especially because they will handle money. So how do they start knowing how to use that money? So it's a conversation we have. Yes.
It is proven scientifically. Children whose parents gave them the piggy banks, they have done exactly the same, like Evelyn is saying. So I think we can probably make it to all parents.
Generation to generation.
Let's cultivate the saving culture.
All right, and actually, let me just say, even when we are going to deposit that money, we go with them to the bank. So they will each get their own piggy banks, then they start separating the money. So they're also learning the different denominations of money.
Okay.
Yeah.
Let's bring in Mwai. Mwai is calling from Huruma. Mwai, good morning. Mwai? Good morning, Mwai. All right. Mwai, if you can hear me, you're calling from Huruma. Good morning. All right, I think we have a problem with that. You want to talk about this issue as well, Tony, in terms of the discipline in the family?
Yes. You realize my discussion is more on making money. Well, very good insights on saving. But also, the other very important thing to teach the children is where does money come from? Because if you just teach them how to spend, they will think money just exists. So it's very important that from a very young age that children know money comes from you working, money comes from you solving a certain problem. This is how you can make money. And even as they grow up, they're able to, and if you consistently teach them that, even at a very young age, they start investing and they start working for money. I've read about so many wealthy people, and one of the things that I've realized, a certain percentage of them is intergenerational wealth. Yes. And creating wealth in intergenerational is very, very easy because you just continue, and that's where we have a big problem, I think, in Africa, because if my grandfather was a farmer and he left it to my dad at a certain age, probably will be processing right now if it was intergeneration. But the problem with us, we start. So all of us at a certain point, we start. So we are told, go get education, and then you start on your own. So to avoid that, even for future, let's teach our children where to get the money. And number two, let's have plans for the intergenerational wealth creation kind of thing.
Because we need to take closing remarks. Just a really quick question as an entrepreneur. Can I copy someone else's script? E.g., I was giving the example of Bill Gates. If I look at his life, how he started, how he was as a child, his day-to-day, if I practice that way, that can will I be guaranteed to be also a billionaire like Bill Gates? 100%,
but you have to be very disciplined, and you have to, you see, you've already, that is the end in mind. You want to be like that person, but you have to walk the talk. You have to do those exact things, but also put in mind that he's in another completely different market, you're in a different market. So you need to be able to curate your market very well. You need to understand what you're selling to the people who you want to harness.
Right. Waithaka, let me hear from you.
I'm in agreement. It's the process that you get through. And the issue that we're having here is that people want to be a techpreneur, but you have not written any code in your life. And the idea is, if you listen to your Zuckerberg and Gates, they were coders. They understood the core of the business. And they started very early. So when you hear that story of they dropped out of college, they dropped out of, first of all, which college did they drop out of? Ask yourself that question. Yes. And by the time they were getting there, they already had years of experience in their area of business. They were actually at the forefront, even if they were young. So please don't try and think that it's just something that they tripped and fell into. No, they were coding much earlier than everybody else and had a competitive advantage.
All right. And I want to come to you in just a bit, George. And there's a comment here from Franklin Amukaya. You may have explained this earlier on, but it still wants clarification. He says, kindly, we would like to improve our income through investments, but we are limited when it comes to applying for loans because we haven't been saving that much, maybe through circles of banks. And it's not that we don't want to, it's because we get very little in terms of salary. How can we get to invest?
Thank you very much. First is to start small. You can't start by buying a Boeing, so you must start with a bicycle. Then gradually you move to a piki-piki. But most cooperative societies, they offer incentives for savings. So you'll, for example, find they'll give you a booster loan for deposits. Then you get a big loan with that immediate boost, so you're able to access a bigger credit than you would ordinarily if you were just saving on a monthly basis. So I think I would advise him to liaise with his SACCO. If he's a member of a SACCO, there could be some product of that kind which would allow him to access a bigger credit immediately.
All right. We want to get final remarks here, and I'll start with you, Waithaka.
Great.
Closing remarks to Kenyans who are watching in terms of financial discipline.
Let's do this. At Centonomy, we believe wealth is the ability to live the lifestyle that you want without having to work for it. What does that mean? That you build enough assets to support your lifestyle. All these things that we've been talking about here, it's towards building assets that can begin to support yourself. There are 3 things you must do. Number 1, track your spending. Know where it's going. Number 2, you must pay yourself first. Take these notes if you're going. Pay yourself first, which means you must save and invest. Please do not make a mistake of just saving. If you're only saving, you're shooting yourself in the foot. You must also be investing, which means your money is growing faster. And number 3, focus on assets, like wonderful businesses that can at some point begin to pay you, like an apartment somewhere that can begin to pay you. And if you want to learn more about these things, get the information. There are books out there. There are opportunities that are out there. If you want to, you can come to us, centonomy.com. We are here to help people to grow that wealth.
Thank you very much. On my side, I would want to urge any listener, if you're not a member of any SACCO, this is the opportunity. Make it a point to join one immediately, particularly the youth. This model, which has been in Kenya for about 50 years, has worked. It is also going to work for you. Let the youth join SACCOs, but stable SACCOs like Arambe SACCO.
Thank you, George. Before we come to Eve, allow us to take a caller. John Kimani, you're calling from Thika.
Yes, please, I'm calling from Thika.
Yes.
I have a question I wanted to pose to the panel.
Yes.
This has to do with, maybe other than being a member of the SACCO, and maybe you have a business and you want to save through the same SACCO that you are a member to, are you allowed to maybe make a saving of the same?
Come again, are you allowed to?
Are you allowed to make savings for money derived from a different business other than from the employment?
No.
Okay.
So can you save from a different income source? Yes.
All SACCOs are open. You can have your monthly commitment in form of a standing order or a remittance from the employer, but it is allowed. You can boost your deposits from any other source of income that is legitimate.
Okay. All right. Eve, your closing remarks?
So my closing comments would be 2. For people who are not really financial literate, I think I benefited from a financial class for non-financial people to just understand what I need to be able to do, not to get into the fire that I was in again. And I think we need to invest in debt management, just the way he said Centonomy has those classes. We need to be able to understand what debt we get into, why, and how you're repaying it. Then lastly, I think for people who are in the service industry, there is so much you can do online to boost your services. And instead of hiring all the time, use project management tools and use the freelance market spaces because they're cheaper. Yeah.
All right. Tony, final remarks.
Yeah.
To make money.
Yes. Having financial discipline is one of, or rather the key way to financial freedom. But of more importance is to having the money. So for me, I would like to say that we need to look, even as we look at our spending plans, we need to see how we can increase our incomes. At Taxsoft Solutions, we train people how to sell at ease and sell more. So we will help you to identify your clients and identify the right people and the people who have your money and how to go about that money. The most important thing is, first of all, make sure that you maximize your income, making sure that you sell more. Either you're selling yourself in an employment or you're selling your products, sell more, sell more. Once you sell more, then come and save and invest. And that's how you
Let me
create
just
wealth.
add one last comment. Yeah. We have a class where we are teaching children on entrepreneurship because they're living in the digital era. And as young as, I think I saw the youngest millionaire at 7 who was analyzing games on YouTube. We need to be able to start also harnessing the talents our children have and showing them how they can be digital entrepreneurs because their space has really changed and they will start competing with robots. We don't have that problem, they do. They will get into a space where they are dealing with cryptocurrency. We are not really in that space, but they have to get into that space. So we need to be able to start looking at our children in a different light because they're smack in the middle of the fourth industrial revolution. So we need to start giving them the entrepreneurial skill sets.
Wow,
yeah.
thank you.
Yeah.
Thank you so much for coming in this morning. Tony Shanghai, Business Consultant, Axsoft Solutions Limited, Evelyn Kasina, CEO, Eve Minette, Waithaka Gatumia, CEO, Centonomy, thanks for coming in, and George Ochiri, CEO, Harambee Sacco. Asanteni sana for that very enlightening conversation. And from a scale of 1 to 10, what's your discipline like?
8. I am an 8. What are you? And you can't say an 11. What are you?
A 4. Yeah, I'll be honest. There's no need to lie. I'm a 4.
It's okay. We will help you.
Let's raise it.
Yes.
Begin to speak positively about what you're doing.
But now that I've learned that, I will do that. Track the spending, save and invest, and find assets.
Good. Thank you so much, everyone, for coming and driving this conversation. Daybreak wants to take a commercial break. When we come back today on Game Changers, as I promised earlier, you get to meet a few of the Kenyans who are rocking it on Netflix. They are behind a new movie. They are the new stars in Hollywood. You get to meet them, but after this break, we'll be right back.